Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Well, the markets are not doing very much at all. Down 50-60 points, 23,550. We started at 23,600. So not very much to really learn or glean from the price action. I guess all you can say, it's a 3-day weekend ahead, and the market is trading accordingly. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi, Rima here. Nigel is joining us from the newsroom floor. Guys, hi. Afternoon.
Hi, good afternoon.
It's not done much for the last couple of days, right? It's pretty much wait and watch. There's a long weekend, and then comes April 2nd.
We're winding down the day, the week, the month, and the financial year, and it's been quite a ride, actually, roller coaster ride, mixed emotions. But despite what the market's doing right now, like I've been saying, the end is probably not as bad as somewhere where we were in the middle. Nigel. Okay, I think we'll get to Nigel in just a bit. But otherwise, as you guys are saying, it's sort of muddling along, not very clear in terms of directional trends. And I guess it's all eyes on the US PCE number that's tonight, but more importantly, what Mr. Trump will think of, what he'll do by the time we come back on Tuesday, right?
Yeah. And second is, 31st is Monday.
Monday.
Yeah.
So it's going to be
Wednesday.
Thursday morning for us.
So Thursday morning for us. Yeah.
Thursday. So actually, when you come back, we'll still be waiting for tariffs. This endless wait for clarity.
But there is news every day, right? So we'll have something to react to, I'm pretty sure, on Tuesday. He's got 3 days to make some headlines.
And he'll speak all 3 days.
Lenient, flexible, thinking, decided, not decided. All these words. Markets are playing on every syllable now, aren't they?
Absolutely. And it's exhausting, absolutely exhausting, I guess, for markets, for people who trading, and especially people who do this by the macros, right? I mean, it's really been quite something. I think just to give you a quick snapshot, more down the number, but it's kind of mixed, really. I mean, there's not very much, as I've been saying, to take away from the price action so far. Market breadth, maybe, if you can just look at, I think it's something similar to what we had yesterday. In terms of absolute number on the NSE, all NSE stocks, declines outnumber advances. But I think if you go by what is up on, if you just go by volumes, I think volumes are on the side of stocks which are rising right now. So that's a kind of action. And I think, you got a bit of some stocks which saw sharp moves yesterday, very sharp moves yesterday, are seeing very sharp moves. So it's like day-on-day reversal. I'm just talking about, look at AG's Logistics, went up, I think, 16% by close yesterday. It is the number one volume-led loser today. It's down 8-9%. So, and I can spot a few other names here which are doing that kind of flip-flop one day after the next. Rima.
Well, winding down the week. For the week, the Nifty is up close to about 0.7%, but this month has been good, the month of March, where the Nifty regained about 6.5%. So that's good. The Midcap index is managing to close with a near 8% rally so far in this month. So it's been a good month where markets have rebounded, they've recovered, they've repaired. For the quarter, since we're wrapping up the quarter as well, the Nifty is down about 0.5%. The Midcap index is down 9.5% from the beginning of the year. And year to date, it's about a 5 to 7% kind of move. On the way down today, IT is struggling. The Nifty IT index is down 1.5%. And then where there's the overhang of tariff, autos and pharma, these two sectors continue to feel the pain, extending losses from yesterday.
And now we have Nigel with us. I think Nigel's already getting the weekend party started. Nigel, we're wondering whether you've got to kind of fix the evening up, but good to have you here. Very flat afternoon.
Well, indeed. Flat's not so bad, right? I was checking the index just half an hour or so ago. We were down 120 points. So it's a good recovery from the lows, and the Nifty Bank is the one that's fighting back. So all's well that ends well. Today's the final day of this fiscal itself, and by the end of it, at least we go home with some green, which looked very, very bleak close to around 40 sessions or so ago. Well, let's get in Mitesh Thakkar back with us. Mitesh, buying the dip seems to be working. We've seen a good recovery from the low point of the day. It appears, at least, going by the screen and going by the options data, that this 23,350 odd mark, that seems to be the first reference point. How are you seeing things?
I was looking at 23,400 and we got a low of around 23,451 today. See, the idea is that the Nifty, after a big rally starting from mid-March, late March, I think then first declined to about 23,400 and then, bounced back yesterday. But the indicators haven't, really changed their trajectory because they were already up and now they were close to overbought levels. While that's on the hourly and the half-hourly charts, while the daily charts have started moving up and they are still doing strong. So my sense is that because the short-term indicators are slightly overbought and the daily ones are still good, I think you might have 2-3 days of consolidation. The idea is that buy into declines over here, identify the lower pivot, which to me is 23,400, 350 zone, as you rightly highlighted. I think that's the area to buy into. And in the short term, be nimble to take profits anything beyond 23,650, 700. But eventually, I do expect these levels to be crossed and the markets will go higher.
What about stocks, Mitesh? Last hour calls?
Yeah. On the stock side, I have a buy on Chambal Fertilizers. I think that's a stock which keeps making new highs. So we'll take a very tight stop loss because, again, this is one stock which is slightly overbought as well, but the structure is still good. So buy here with the stop at about 622 for targets of roughly around 645 to about 650 on the upside. And the other one which I like is from the banking pack, that's Canara Bank. Canara Bank has been a recommendation earlier as well. Now I would recommend buying with the stop just below levels of 87.90 and look for targets of around 92.
Okay. All right. Mitesh, got that. Thanks very much. We'll come back to you for some final trades in a while from now. Let's get down to some of the interesting stock action of the afternoon. And two of the stocks are on our radar, NHPC and ONGC. Both are reacting quite well to positive brokerage notes. We have a note on NHPC from CLSA. And there's a call on ONGC from Jefferies. And Upasna has read the notes, so let's ask her for the highlights. What are these brokers saying, Upasna?
Well, good afternoon, Surbi. First up, let me start with NHPC. The stock saw a strong up move today, but cooled off a bit right now, but still holding in a sharp up move. Now, CLSA maintains a high conviction outperform rating with a target price of 117 per share. It remains confident that NHPC is set to commission Parbati 2 hydroelectric power project in the first week of April. The commissioning of this project is seen as a turning point for the company, unlocking long-awaited value for the shareholders. This hydroelectric project has turned out to be the most complex with a lot of geological surprises. Now, the project was initially planned for completion in 7 years, but has taken as high as 25 years due to its complexity for the completion. Now, CLSA believes once the operation starts, this will increase NHPC's capacity by 11.5% and boost its regulated equity by 26%, improving overall earnings profile of the company. Now, CLSA says that NHPC's stock price could double in next 4 years. Now, coming to Jefferies on ONGC, it has given a buy rating with a target price of 375 per share, and they have highlighted some of the important takeaways from the US roadshow. Now, company expects 10 to 12% production CAGR over FY26 to FY30 on the back of Mumbai high growth. Now, BP's success in Romalia anchors ONGC's outlook is what they have highlighted, and reforms in gas and crude pricing support FY25 to 27 EPS CAGR of nearly 14% is what they have said. Now, stock is discounting crude at $55, making return ratios favorable is what they are highlighting. So all in all, these two stocks continues to remain in focus today.
That's a really interesting last point, especially, Upasana, because I was wondering how are they confident in ONGC if oil prices are going to be muted, range-bound, to maybe even lower, considering it's all about drill, baby, drill. Courtesy the US president. But interesting call coming in. Thank you very much for that. Well, we've got Prakash Diwan with us this afternoon. Prakash, good to have you on. Happy Friday to you as always. So let's talk about these two PSUs. PSUs definitely are finding some favor in the market again. The momentum seems to be kind of gradually coming back in this pocket. Would either ONGC or NHPC, or maybe both of them, would they make the cut for you?
Okay, so here's what, Sabir. While PSUs have come down, so have a lot of other names. And my sense is that given the kind of slew of announcements that have been coming from the US administration, there could be some sort of an indication in terms of what the long-term view would be in terms of conventional energy prices. and of course, OPEC's action on that. So crude as a piece in this thing, entire equation is something which has a very high level of uncertainty. While we've penciled in the fact that it will be soft, we really don't know how long that stays. So I believe we'll have to probably give it some more time. But from both these names, I think NHPC seems to be something which I think has lost ground without too much of explanation or attribution which could be justified. So that's where some comeback will happen. ONGC will take much longer to discover its value and make a comeback. But NHPC, I do agree. And they've got a lot of other things in the pipeline related to pump storage and all of that. So they're also getting into BESS, battery energy storage system, which is not something which an NHPC kind of a play you would anticipate. But there's a lot of tendering that's going on. The expansion is underway. I would believe there's some salience there. Am I buying any of these two? Not yet. All the buying has been deferred till the 2nd or probably for in our case 3rd of April, and that's when we'll get some clarity in terms of where the world reacts.
Okay, let's get to the other brokerage call, which is impacting the stock, and that's LTI Mindtree, where Goldman Sachs today has downgraded LTI Mindtree to a neutral from a buy. The key reason is that LTI Mindtree has a higher exposure to discretionary spend versus peers. So amongst all the large cap IT companies, LTI Mindtree's exposure to the United States is more at 75%. 75% of its revenues comes in from the United States, and their discretionary spending perhaps is getting delayed. There is a prolonged recovery, and that could hurt. And therefore, according to Goldman Sachs, they see a limited likelihood of the company returning to meaningfully above sector revenue growth. Remember, historically, LTI Mindtree always reported top-line growth, which was above the industry. They were always in the top quartile of the industry and by a couple of 100 basis points. But now they're saying the growth of LTI Mindtree versus large-cap peers has converged, and the company's margin profile has deteriorated. They've also seen, on account of the merger, a lot of leadership churn, and that has hurt. Therefore, that's the reason for the downgrade on LTI Mindtree. The target price stands at 4,500, which is bang where the stock is currently. They like Infi and TCS in the large cap space, but between the two, their preference lies with TCS. Prakash, in about 10 days, we'll start talking about the numbers, the guidance. Anyway, the expectation's not high. CLSA is talking about a 2 to 5% revenue growth for Infi in terms of a guidance, for HCL Tech 3 to 5%. So the companies could be conservative to begin with. What are your thoughts on IT?
No, I agree, Rima. That's a good part. We are getting into earnings season with very muted expectation. And to be fair, the lack of clarity in the US environment is one of the reasons why nobody is very charged up about these earnings. And the commentary is something which will, of course, take center stage. The Q4 is nothing very spectacular. We've not heard some new contract wins for any of these guys. So all of that TCV values and all will remain probably capped to some extent. But I think IT is something which will have to give another quarter to rest and consolidate. There's nothing very exciting about it. In fact, LTI Mindtree, this report talks about 4,500, which is probably very close to the CMP. I wouldn't be surprised if it actually tends to go towards 4,000. So, that's the kind of slippages that could happen in terms of performance, and hence the price volume action to follow along with that. Not too positive yet on IT till something turns around in the US and this whole fear of a soft landing or hard landing is out of the way for the companies to really start making some strides. All IT focused money is going to China, and it will continue to do so for the next 6 months.
Okay, all right. Thanks a lot for that, Prakash. Let's focus on Jefferies Crisford. The greed and fear note is out. It's keenly watched by investors. In the latest note, Chris shared details of Jefferies' reshuffle in its long-only portfolio. Hormuz has gone through the details of that note. He joins us in to fill us in with more. Hormuz.
Interesting changes Chris Wood has made this time around in both of his Asia ex-Japan as well as the India portfolio. We'll start off with the Asia ex-Japan long only first up. And there is a lot of churn that has happened within the real estate names in this, and that is something that Jefferies has been betting on as a house for quite a while. Now here he plans on removing the investment completely in Godrej Properties. He's going to increase the investment in Macrotech by 1 percentage point to 4%. And he is also introducing a new investment in DLF ETF with a 3% weightage. Now, all of these three names so far this year have declined anywhere between 15 to 25%, and they're seeing some reshuffle taking place in the Asia ex-Japan long-only portfolio. Now, Chris Wood is also introducing a 4% weightage in Make My Trip in the portfolio. Of course, that's listed in the US, but that will be funded by removing the investment completely in Axis Bank. So these are the changes that he has made in the Asia long-only portfolio. For the India portfolio, though, there is only one major change, and that is he's going to increase the investments in Reliance Industries by 2 percentage points. A positive brokerage note coming in from Goldman Sachs as well today on Reliance Industries as well. And this increase in weightage by Chris Wood will be funded by shaving off the investments in HDFC Bank and SBI by 1 percentage point each. So interesting changes coming in for the greed and fear portfolio, particularly skewed towards the real estate side.
Okay, all right. Thanks a lot for that. Prakash, any of these stocks excite you?
Oh, I think I continue to be positive on Reliance. So I do agree it's probably time to load up because, we've had this, loss in value for various reasons. A lot is more systemic than specific to the business itself. But all sum of parts tell you that there's a reset that could happen anytime. Again, I don't know the timing, but from a near to medium term perspective, Reliance at sub 1300 is definitely you need to take a serious look at it and see if it's not in your portfolio in the right percentage. It could make a big difference in terms of making it stronger.
Okay, all right. Got that, Prakash. So that's some of the ideas. Just going back to the screen to talk about some of the big movers and shakers. IndusInd Bank obviously is taking it on the chin today, down about 3.5%. Some of the auto names have been quite weak. Maruti, Mahindra and Mahindra, these are names which are on the downside. Even Hero for that matter. Hero is down about 1% or so. So not the best of sessions for auto. Prakash, when we come back on Tuesday, we'll obviously be looking forward to the monthly sales numbers. March was a complete washout. Passenger vehicles, even two-wheeler makers, it's been very, very sluggish. Would you expect any pleasant surprises anywhere? Any particular company and stock that would stand out? M&M is the only one that has had very, very steady numbers. But aside of that?
No, absolutely. So I think that you said it. There's no reason for M&M to succumb to this change in mood given the 25% tariff introduction which has been announced. M&M has no PVs going to the US. And as I keep saying, the other piece in M&M that's going to start revving up is going to be farm equipment, tractors. So there's no let up in that. And to be fair, M&M has actually got this drubbing because of other reasons. There is an anticipation that the EV launch, the new generation EV launch that they have is probably not as successful. But it's too early to call that out. I would believe in 6 months, things could look very differently for them, given the fact that they have far more ability to provide charging infrastructure that goes very well along with the sales build-up. So that's the company you need to focus on. It could go back to those 32, 3,300 levels, which is almost like a 20% move. In a market like this for a large cap, I think that should be rewarding enough.
Okay, absolutely. And, we'll see how this one goes. By the way, any thoughts, Prakash, on BSE? It's a big mover. And it's like the understanding is that BSE will stay where they are, which is Tuesday, in terms of that weekly expiry. And NSE will have to take the other spot, which is Thursday. There was, the consultation paper when it was announced yesterday seemed to make it sound like, they're okay as long as it is these 2 days. But I think there is more and more, the view seems to be converging to the fact that it can't be both on the same day. That would have really hurt BSE if NSE also moved their expiry to Tuesday. The other thing, of course, is now that all this change will require SEBI approval. So what's your sense, Prakash, if you've looked at this and any thoughts?
No, so essentially, look at the chronology of events. There was this anticipation that option volumes have dried out, so NSE won't gain much, but BSE probably continue to march ahead with incremental improvement in its volumes. Then you had the Monday announcement from NSE, which would have taken away a significant volume share from the BSE, and the BSE stock reacted. So whatever it reacted, whatever it gave away, is probably now coming back, given the fact that Tuesday and Thursdays are good enough for both of them to continue doing their volumes, and BSE would live to fight another day. But remember one thing: this whole thing of yo-yo on the option volume anticipation is not something which the BSE stock needs to rely on in the near to medium term. You have far more superior metrics and triggers that could be relied on in terms of growth, and especially their M fund, whatever that mutual fund platform, the way the BSE Star has been accepted as something which is growing very rapidly. So if you evaluate it on those bases, yes, then the BSE stock looks very promising from a medium to long term. And the other reason I leave you with is, when I speak to a lot of people on who understand the NSE stock as well, though it's not listed, this interpretation that it's going to take longer for the NSE listing is probably again got added a bit of that sparkle to BSE. So it's too many things that are hinging on a bit of a surmise and speculation. But I would believe fundamentally BSE is strong, but I would like to buy it at a lower level, and I'm sure there are going to be days where you will see it at softer valuations.
Prakash, thank you very much for joining in, and enjoy your long weekend. We need to get into a break with the news that it's flat on the Nifty and the Sensex. Midcaps have a slim gain, 75 points up. Banks are moving up. The Nifty Banking Index is up nearly about 200 points now, so it's pushing higher and higher. Discover the power of Young Bharat at the Rising Bharat Summit 2025, where innovation, ambition, vision converge. So this is your exclusive chance to gain insights from global visionaries. Jeffrey D. Sachs, one of the world's most respected economists, and Borge Bronde, President and CEO of the World Economic Forum, will be sharing their insights on India's role in a changing global order right here at the Bharat Mandapam, New Delhi on April 8th and 9th. Book your passes today.
Welcome back. Well, it's time for our special segment, Midcap Microscope. Nigel is today focusing on a stock that pulled back 40% but has bounced back from recent lows. Nigel, over to you.
Welcome to Midcap Microscope. Force Motors, that's the stock on our radar today. And the big question is, will it be a force to reckon with? Well, after a stellar rally, the stock price pulled back close to around 40%, but it's bounced back from the recent lows. the company actually has been ramping up its gain. The quarterly sales numbers from around 1,500 crores per quarter, that's moved to around 2,000 crores. The margins as well have improved to early teens. And from being a net debt company to the tune of close to around 700 crores, now it's a net cash company. Well, Force Motors has three revenue streams. The largest chunk coming in from the sale of LCV and SUVs, while the other two segments, they're relatively smaller. The Force Traveller, that's their flagship vehicle, and it's used for shared mobility, school buses, delivery vans, and even ambulances. In fact, the company bagged an order to supply close to around 2,400 ambulances to the UP government. But now, Force Motors is eyeing the premium segment with the Force Urbania, a luxury van that's used for corporate commute, elite tours, as well as hospitality. The interesting part, it cost nearly half the cost of a Mercedes Sprinter. And guess what? The Mercedes Sprinter engine is made by Force Motors itself. And let's not forget the rugged Force Gurkha. That's an SUV that's built for serious off-road adventures. In fact, the company has bagged an order to supply close to around 2,900 Force Gurkha vehicles to the Indian Defence Forces. On the valuations front, well, the stock trades at roughly around 21 times its FY25 earnings. What to track from here on, though? Increased investor engagement, that's something that the street would want. A potential EV variant launch as well, and export growth. Currently, exports is a very small part of their business, but they have been saying it has big potential. So is Force Motors truly a force to reckon with? Well, time will tell.
Interesting data and analysis there, Nigel, but let's get you some more opinion and an important voice ahead of Trump's April 2nd tariff announcement. Neelkan Mishra of Axis Bank tells CNBC-TV18 that tariffs can impact global GDP by up to 1%. Adds that reciprocal tariffs have a $4 to $5 billion impact on India.
I think it's very important to see this as one of many important milestones because this will just be a starting point. Tariffs are only one form of industrial policy. You have many other forms of industrial policy which are not possible today because people are worried about the World Trade Organization. So we are going to see a lot of chaos, a lot of uncertainty. And imagine being a country planning your supply chains in this process. It is going to be very difficult. We say that if there were true reciprocal tariffs, the impact would be about $4 to $5 billion. Or if say it was $8 billion. So it's like 0.1 to 0.2% of GDP. Now for India, given that exports to the US are less than 2% of GDP, whatever be the impact, so if 2.5 goes to 10, it's 7.5% of 2%. Frankly, that's not what I would worry about the most. I know it will affect a certain set of companies a lot. What I'm much more worried about is how uncertain this makes things for the world, and therefore what happens to global markets and what happens to the global economy. And therefore, the channel through which I think this uncertainty will affect us will be the financial markets and not as much the trade. To give you perspective, if say corporate capex as a percentage of GDP globally is say 8 to 10%, it's higher in India, it's higher in China, but globally it should be about 8 to 10%. And if 10% of those companies, 10-12% of those companies or of those investments get postponed by 6 to 12 months because of the uncertainties that we're talking about. We're talking about a 1% of GDP growth globally getting shaved off. It will show up over 12 months. There is significant amount of local easing that we can do. There is significant amount of local demand that we rely on. And if we can get the liquidity conditions right, we can somehow get the credit growth back up and running. We can revive some of the slowing volumes on the real estate side. I think our economy should be able to withstand some of this global volatility a lot better than others.
Very, very nuanced conversation earlier in the morning, and that was a slice of that with Neelkant Mishra. Nitin Bhasin is with us now, Head of Institutional Equities at Ambit. News just breaking also that the Cabinet has approved the electronics component PLI scheme. Do we have a number? We had the management of Dixon, and we probably should get the sound bites of Dixon, which of course is the largest player in that space, almost a poster child of the electronics component manufacturing. Mobile phones, of course, 80-85% of their business, but they're, of course, fast diversifying into other areas as well. This has come through. There were some expectations that the number could be 40,000 crores. Yesterday, our colleague Ashmit reported the number actually could be about 25,000 crores, but we'll get more details as we go along. But this has now been cleared, as was widely expected. Nitin, good afternoon. Good to have you back. Sorry.
I think it is 25. I'm just going through some of the details Ashmit is putting out. I think indeed, as he was reporting, it is 25,000 crores and not the 40,000 crores that I think industry was hoping for. Some of the brokers were writing about it, but 25 seems to be the number.
Absolutely. Nitin, any thoughts on this one? And, as I said, it's widely advertised, so I'm not very sure whether anyone will make any changes to their estimates based on this. They're all probably long done. But your thoughts?
No, I'm yet to see the whole thing in detail, but clearly if they have changed the contours of the PLI from the earlier, which used to be more revenue-based, which was not leading to the right kind of investments in the component ecosystem, with this being for the component ecosystem, definitely much, much better than the earlier PLI. Companies which are focused more on creating component capabilities, we've been covering companies like Amber for a while, and we have highlighted that capabilities around components in India need to be beefed up if we need to go out and win any market share on China Plus One or other developing markets. Quantum, I would say, is not to be that much important. I would say how and what capabilities and what global joint ventures this enables will be the key thing to watch out for, because the component technologies are with the global players. So I think PLI is one step, bringing in global partnerships. And
Nitin, you like Amber? Is it in this space at Ambit?
In this space, we have covered both the stocks, but we have believed that Amber has created enough amount of component capacities, backward integrating from the AC business, now getting into defense and electronics. I think they have done a good job, I would say, relative to the other players in this space. We like their component focus.
Nitin, hi. What about the view on the markets on the whole, and what are the sectors, themes that you're recommending? We seem to have started a mode of recovery. So what would your advice be to best play that?
So we still believe that CY 2025 will be a year of moderation in which we don't see a very significant market returns. Plus minus 5% is what our view has been from the time we entered the market in this year. We continue to still think that the relative outperformance for either a wealth protection or creating alpha would be focusing more on large cap companies rather than mid caps and small caps. Yes, in the last couple of weeks, we've seen FIs come back. We've seen some bounce from the lows. It will remain a volatile market. It will remain an earnings under pressure sort of a market, which will lead to some bit of questions around liquidity, also seesawing. We have seen that from the global investors. Perhaps in the next 1 or 2 months, we'll have to watch out for how the local markets, local investors also impact the direction of the market. But we continue to highlight to our global and Indian investors that it's the large caps, not the mid caps and the small caps, and stock picker market, not a very one-sided bull run. Very similar to what we've seen in the last 9 years.
Right. Hi, Nitin. Good to see you in. What about your interactions with the FI community? I recall when you joined us the last time around, you had pointed as a firm that the short positioning are at historic levels, and traditionally we see a bounce from there. And you expected flows to come back as well. What's the current feedback you're getting? The flows have improved, no doubt. The sell flows are out of the way. Now they've turned into buy flows. Do you expect this sort of a trend to continue?
I think, again, meeting a number of closer to 2 dozen long-only investors in the Western Hemisphere, what you notice from them is that many of them had actually, concerned about the valuations in India.
Some of them are finding some pockets of ideas to bring money back in and deploy, but some of them are also sitting on the sidelines saying that stock prices may have correct, but the valuations have still more room for downside, and perhaps their concerns around the valuations stems from the earnings estimates or the outlook of consumption or the outlook for capex in India, or perhaps even one was to add the outlook around the global economy as well. The kind of volatility in the world trade could come through because of the tariffs of the US, perhaps. So hence you are seeing some sort of excitement, discerning nature coming back to India from the global investors, but not all of them turning overly bullish, perhaps what they were about 12 months or 18 months back.
Okay, all right. Nitin, hi, good to have you on the show this afternoon. So let's talk about the current portfolio construction. I mean, given the visibility that we have, global, we don't know how things play out, but local, I mean, I think there's a better sense of the recovery now. So given that, what is the portfolio construct? What would be the top 3 overweights and the segments that you are very clearly avoiding?
So, we maintained that this year we will be looking at it as a stock pickers market. But at the same point in time, it's the mega caps, the large cap names we would prefer or advise to the investors to be overweight on. Even within the Nifty or top 100, stick to companies which are more heavier weights. We are seeing the earnings of the heavier weights holding up much better, not witnessing that sort of downgrades, what we see in the smaller to mid weights, either in Nifty or Nifty 100 or even beyond that. Number 2, banks. Clearly, banks, if you look at the last 3 months or 6 months, they have outperformed the market marginally, but that has been our view that banks is where the earning support is. If you look at FY26, large part of our earnings are going to be coming from either A banks or global cyclicals. Banks, we are confident, but not so much on the global cyclicals. We very well are also highlighting that the banks could be growing anything between 12 to 14% of credit growth. So banks would be the other one. About a month or 2 back when we had met last, our view was IT not to be in, but we highlighted now that given the correction that we've seen in IT, perhaps an underweight should be more weight to equal weights. And FMCG would be a more tactical 3 to 4 months sort of a call in which we could see positive returns in the next quarter. We've seen for technical reasons, for flow reasons, for news reasons in the last 10, 15, 20 years that FMCG, especially rural markets, are also holding up slightly better. FMCG does very good in the first quarter of the calendar year relatively. So hence, I would say a tactical call for FMCG for the next 3 months.
Got that. Nitin, thank you very much for joining in. You enjoy your long weekend. That's the call from Ambit. From being underweight tech, perhaps it's now time to be neutral tech and a tactically bullish on FMCG for the next 3 to 4 months. Slip into a break. As we do that, here is some good news for all our viewers, because India's business news leader is now just a click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, all our articles, financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or the Google Play Store, or you could just scan the QR code on your screen.
What happened in 2024 with the election of Donald Trump is that the world is not going left or right, but America is turning inward for the first time.
Is US exceptionalism ending? Do you see the US market topping out?
Donald Trump and his MAGA crowd are going to learn a very hard lesson in economics. When economics meet reality, economics is going to win. It's just, it's like when the Titanic hit the iceberg won. The European markets are all at lifetime highs. So there's something going on in Europe. There's a very old saying in Germany, which goes as follows, that a lot of Germans don't believe in God, but every German believes in the Bundesbank.
Are we in for a chaotic period in the near term in markets?
I think as Aldous Huxley described in his famous book, A Brave New World. I think that's the reason I said that the world has shifted on axis. So it requires us to have new hats, new thinking. I do not believe in particularly the wealth of created through gold or through real estate or through any other asset class, equities long-term always deliver a superior rate of return.
Well, markets all over the place on this first day of a new series and on the final day of this fiscal year. So that's why, in fact, we're seeing a lot of volatility from being up close to around 50 points. Now we're down close to around 80 points or thereabouts. That said, Ramesh joins us on D-Street Chatter to tell us what is he picking up. Well, Ramesh, some kind of a pullback, fair bit of volatile session, but a couple of stocks actually from the broader markets are doing very, very well. I guess it's that year-end factor that's playing out.
Yes. So, Nigel, clearly a profit booking day, but the volumes are on the lower side. And rightly so because of the long weekend we have, right? So it's a truncated week next week. But again, from a flow perspective, the FI buying continues. So that's been a big change which has happened in the last many days. And that trend continues today's market as well. Even today, I understand there is a basket buying at a leading FI. So that clearly shows that there is momentum from larger FIs on the buy side as far as India is concerned. Within sectors, select PSUs again stands out. So that momentum continues in the PSU stocks. And for the last many days within the financials, it's the private banks which are getting well bid. So again, banking as a sector is something which a lot of FIs are betting on in the new series. I guess for the April series, as you rightly pointed out in the morning as well, historically it's a good month, right? But we have big events to watch out for: the reciprocal tariff on 2nd, the RBI policy on 7th to 9th,
earnings,
and then earnings as well. So that will have a dominant effect on the overall performance for April series. But the good part is that there is a bit of momentum back in the broader markets. And it's backed by FI buying for the last couple of days.
Well, that's right, Ramesh. What about individual stocks? What are you picking up?
So a lot of stocks which are part of my list today. So I'll start with a couple of the PSU names where there is buying interest. GAIL and Gujarat Gas both stands out in terms of very strong delivery-based buying. So expect high delivery volumes on the buy side on both those names today. Second is a couple of stocks where there used to be flows in the last 30 minutes. BPCL, there is a small MOC buy flow. And on CDSL, there is a small MOC sell flow. MOC is basically market on close, which normally gets executed in the last 30 minutes of trade. So these are the flows from a flow perspective, BPCL and CDSL. The third is couple of cash stocks where there is not large volumes. One is Chola Holdings, which is a holding company for the Chola Group, and Timken India. Not very largely traded stocks, but there is a bit of interest back. So very small, but there is buying interest from larger FIs in both those cash names. And the last is Coforge. It stands out for me because within the IT pack, it has relatively outperformed. The stock is pulled back as well from the recent lows, and the stock has been consolidating of late. But interestingly, one leading long-only fund has seen a very active buyer in Coforge in the last couple of days.
Thank you very much for that. By the way, Wipro is now the top Nifty loser, so it's extended the fall in the second half of the trading session. Earlier it was Innocent Bank, now Wipro too is down about 3.5%. Mitesh is back with us for a few last minute calls now. Mitesh, what would you have for us?
So I think, very clearly the market continues to be more of, market which is trying to build a base at higher levels after a rally. So we look at stocks which are trading near the day's high. Nykaa, I think, comes on the radar. It's just around the 200 average area, which is 180, but I think the structure is positive. It might clear that. So BTST here with the stop at 177.5. And look for a target of 180 to 183. And HDFC Life is another one which I've been liking for quite some time. So BTST with the stop at 680 for targets of 694.
Okay. All right, Mitesh, got it. Thank you very much for all the advice today and through the week and through the year, right? Celebrating the end of a financial year. So you have a great weekend and we'll see you again on Tuesday. Let's move on and address a very important story. Just 4 days to go for US President Donald Trump's deadline to impose reciprocal tariffs on key trading partners, including India. This is, of course, both nations have been holding talks for the last few weeks. Sources are saying that it's not just tariffs. The US is strongly pushing India to drop non-tariff barriers as well, which would be differential tax treatment and quality control orders. Despite the pressure that's coming in from the White House, India may not react to reciprocal tariffs immediately. But New Delhi may offer to buy more oil and defense equipment to put the tariffs on hold. Parikshit is joining in with details of this very, very important story. These are very high-level negotiations that are ongoing. And Parikshit, I think the whole country, definitely the entire business fraternity, is waiting with bated breath to figure out what the outcome is. So tell us that this will not be about this is my number, this is your number. This could be more nuanced and go into non-tariff areas.
Well, that's right. The assistant USTR, Brendan Litch, who is a career trade negotiator for the last 10 years, he's been in India for the last 5 days to hold intense negotiations with the Indian side over the bilateral trade agreement. And he's come with a list of non-tariff barriers where the US is seeking concessions, immediate concessions from the Indian government. US has highlighted concerns on differential tax treatment of US companies. They want concessions and reprieve on local content requirements, data localization, and they want a level playing field for Indian and US banks as well. USTR has highlighted that India's quality control order, and there are almost 1,000 or 1,600 of them, they impede access for US companies in India. India is mulling concessions on these non-tariff barriers and is likely to offer them as part of the overall bilateral trade agreement and not outside. At the same time, and this is going to be tricky for India, US has expressed concern about India's MSP regime and also agri-subsidies which we give for our farmers. So these could be red line in the negotiations. What we are hearing is that the reciprocal tariffs on the 2nd of April will come into effect for India as well, irrespective of the status of talks on the bilateral trade agreement. What will India do? We're hearing from multiple sources in the government that India may not react immediately. However, we may wait and have talks and seek a pause. This is because there is a feeling that there is a larger game that the US is playing. It's not just about a trade agreement. It's not just about lowering tariffs and non-tariff barriers. US wants to be the greatest energy supplier in the world during the Trump administration, and he wants India to purchase more oil and LNG. So it is possible that in order to seek a pause on the reciprocal tariffs that come into effect on 2nd April, we may offer to buy more oil, more gas, and more defense platforms from the US. And different proposals are already in different stages within the government as well. There are also concerns about giving too much concession outside the BTA and within the BTA also. And this is because there is a feeling that US has been withdrawing from different global orders, such as the Paris Agreement. He has also withdrawn from the WTO in terms of funding. He has put a pause on funding under the Inflation Reduction Act. So there is a feeling within the government and some quarters that there is absolutely no guarantee that despite concessions, the warm welcome or the red carpet we give him in India through trade concessions in the agreement, there is no guarantee that Trump may still want more concessions or may trigger some other sort of war with India in the future. Therefore, whatever we do must be within the legal framework, must be in line with what we offer other countries, and we must make sure that we also are careful about the larger play that the US has here, which is oil and gas and defense platforms.
All right. Thank you very much, Parikshit. Very interesting and very important and sort of a developing story in that sense. We'll keep track of this with more as this one develops over the next few days, because it's literally days now going into that 2nd of April deadline. Well, let's just get you some market opinion now. Madhu Kela of MK Ventures was with us earlier today. He was actually our guest editor. We actually spoke to him about the sector he really likes, and we'll get to that in just a bit. But first, a quick view on the markets from Madhu. He believes don't extrapolate past fabulous returns onto the future, more reasonable going forward. Listen in.
From a big picture perspective, we have spoken this many times. I would once again request that people must not extrapolate what has happened post-COVID in terms of return, in terms of finding multi-bagger opportunities where money has gone from 10 to 100 times, right? Because the lows were so drastic, the returns were fabulous, right? So I don't think that we must expect those kind of returns. Having said that, I am not in a camp that the bull market is over and this is the beginning of some bear market, and you can take the number reference from wherever you want. So if you take the reference from COVID low, then the returns will look very, very attractive, and hence the next 5 years may look very dim. But if you take the same base from 2013, where the market was at a low, then it is again average return, which the market has delivered, including the last 5 years.
Absolutely, and that's essentially the view on the market. We actually, as I said, the conversation was more about the space he likes very much, which is the contract research and development space, and as far as the pharmaceutical area is concerned. Madhu turned interviewer. He had Loris Laboratories and One Source Pharma on the other side. Management's answering questions. Vinny is here now with some of the key highlights from that conversation. Vinny, over to you.
Afternoon. So yes, an interesting conversation that was there because it showed the opportunity that actually comes in for the CDMO players. First, let's take in some of the highlights that came in from Loris Labs. They said that this is a multi-billion-dollar opportunity for the Indian CDMO players, and they expect this opportunity to see a sharp increase over the next decade. Now, two factors that come into play for CDMO players is research and development as well as development and manufacturing. Loris Lab management highlighted that development and manufacturing requires a lot of investment, and as of now, the asset turnover for the company as well as the industry is around 2:1. So that's important to watch out for in terms of an investment strategy that comes in for companies. Other than that, they said that the industry trends that are seen for CDMO side is small molecules, where there is a lot of growth coming in and where there's an increase in terms of demands. Companies focusing on these spaces and sectors would see a good growth, especially small molecules, given that that trend has started to pick up, and in the last 5 years there's a lot of need for small molecule capacity, so focus was on that front as well. Other than that, OneSource did highlight some of the points coming in for GLP-1 opportunity and the drug that is there. They spoke about the oral drug coming in, and they said that this will have a big role to play, but they believe that the efficacy versus an injectable is still much lower for the oral drug, and there could be some bit more of a side effect. So that's something one should watch out for when GLP-1 oral drugs come in, or how important would that be as a play for these companies.
Vinny, thank you very much for that. It's an interesting conversation, and actually you can find the entire sort of chat with Madhu and Loris and OneSource on our social media feeds, on YouTube, etc. Time for a quick commercial break here. More coming up on the other side. 9 minutes to market close.
Welcome back. You're with us in the last leg of Closing Bell, counting down, just about 6-7 minutes to go. It is about a 90-point dip on the index. So, yes, it's turning out to be a bit of a soft afternoon, range-bound market otherwise. Sudeep Bandyopadhyay is with us. Sudeep, hi, good to have you on. Let's talk about, some of the newsmakers. A lot of the defense stocks obviously have been in news because they've all got orders, whether it's HAL, BEL, BEML, even the private sector names, Bharat Forge. Anything that you're buying here?
Well, BEL has been my favorite for the last 1.5 years, and I continue to maintain that view. After the correction which we witnessed from September and onwards, I think it's become even more attractive. Look, BEL is in defense electronics, and now they cater to Air Force, Army, Navy, all three wings of armed forces. The global opportunities are opening up in a big way with rearmament being the theme in Europe. And on top of it, I think BEL's quarter-on-quarter performance has been outstanding. The balance sheet is good, efficiency is good. They also have ventured into non-defense areas like maintenance and electronic work for the metro rail segment, which I think is again growing opportunity. Order book, you already said, fantastic order book, continuously getting orders. And I see a great future for this company for the next 5 to 10 years. So current level, one can buy with about 1 year plus time horizon in mind.
BEL can be bought with a time horizon of a year in mind. What else, Sudeep, what else is catching your eye in terms of single stocks?
Well, Prashant, power sector is what I do like, and I was reading the report on NHPC. I think it's absolutely correct. NHPC can significantly move up from here. I like NTPC as well. I think the leader in the power generation segment, fantastic backward forward linkages, and with the way the power sector is positioned, I think it's a structural bull run we'll see in power related pretty much all the segments, whether it's the power generating companies, whether it's the financing companies, ancillary companies. I think the opportunity is humongous. If they can manage their affairs, I think there's a runway is great. So NTPC definitely, one can look at the power finance shares as well, because banks won't be able to meet the financing needs for the new power plants which are going to come up. So power finance shares will have a great role to play, whether it's an REC, PFC, or even IREDA. I think long term it looks great.
Okay, so those are some of the names on the power financing side. As we're winding down, just checking the cuts on some of the tech stocks are quite deep. Wipro, for instance, HCL Tech, these stocks are down quite a bit. So as we wind up, we've got two new kids, not really kids, two giants, should I say, on the Nifty, Zomato and Jio Financial Services. Do you think these stocks can go beyond the Nifty jinx? Would you look at an investment in either of them?
Well, I think Jio, a lot needs to happen, so I won't look at Jio at this stage. But Zomato, definitely, there are some challenges on their, the quick service delivery part of it. So Blinkit will take a little more time to stabilize and help the overall profitability. So food delivery business is slowing down a bit, but I think the potential is huge. There is absolutely no doubt about it. So they will see some soft market treatment for some time. But from a long-term perspective, if I have to buy one stock in this segment, it will be Zomato. They are the leaders by far, and better to be with the leader in this segment.
Absolutely, better to be with the leader in this particular segment. Sudeep, thank you very much. Good speaking with you, and have a good weekend. It's a longer than usual one with one extra day thrown in, but the next week promises to be as headline heavy as this week has been. 2x the work and just keeping up with the headlines. That's the kind of market we've been in. A bit of a slip as we go into the close, right? Look at that. I think 3 o'clock, I think we've come off about 50-60 points in the last 30 minutes or so of trade. So down 100 points, not being able to sustain. And I think you could just blame the longer weekend because, potential headlines for one more day. And of course, headline risk has been higher than usual over the last 2 months. Weekend headline risk in that sense. So Nifty Bank is flattish. You've got the Nifty, which is down. Midcap index is down 0.5%. The small cap index is down a little bit. I think market breadth is slightly negative, like yesterday. But there are enough names which did well on the upside as well with volumes. So, it's an okay-ish kind of session. As far as the markets are concerned for the week as well. I don't think we've done very much. But of course, remember that the week before was very, very large. That was that 5 to 8% kind of gain a week for indices, depending on what you were looking at. So understandable that this one has been a little flat.
Absolutely. On the mid-cap screens as well, today was a day of some profit taking. If you talk about the areas where there was price and volume action, some of the PSU names have cooled off a little bit, particularly the PSU financials. IOB, for instance, sharp knock there, 6-7% down on that stock. You've got other names, for instance, a UCO Bank also on the lower side. Restaurant Brands Asia, where there was a fundraising exercise earlier in the week. That stock was under a lot of pressure today, about 5% on the lower side. Some of the sugar names like Bajaj Hindustan and Renuka, they have lost a little bit of ground as well. So those are some of the key names. As Brainbee Solution, First Cry, 6% down over there. This is where the cuts have come in. Talking about the gainers, however, it's not like the day was all down. Godfrey Phillips, about 5% up on this stock. There was PNG, which was seeing some buying. Zaggle managed an upward move, about 4-5%. up on this one. And then stocks like transformers and rectifiers, Power Mech, which announced a big order win at the start of this week. Today it was up about 12%, so big buying on Power Mech. So some selective stocks also moving higher. Otherwise, a quiet end to a week that's been more about consolidation. 23,519 for the Nifty. That's where we leave the day and, of course, the financial year. It's a wrap on this edition of Closing Bell. Many thanks for watching, but don't go anywhere because we have Editors Roundtable coming up next.